If you wait to save whatever's left, you usually save nothing. Automatic saving works because leftover money has a habit of disappearing. If you move savings right on payday, timing beats willpower and the bill-paying scramble. It also cuts decision fatigue because you're not renegotiating the plan every week. The biggest blocker is overdraft risk, since one $35 fee can erase a month of progress. And since checking pays near zero interest, keeping extra there doesn't help you. Automation turns saving into a system, not a mood. The cleanest setup starts with a separate savings account so your savings doesn't blur into spending. Make sure it's protected. Banks use FDIC insurance and credit unions use NCUA, typically up to $250 per depositor, per institution, per ownership category. If the account is joint, confirm how coverage works for both owners. For idle cash, a high-yield savings account usually pays far more than checking. Use a goal-based sub-account for things like emergency fund, and confirm how fast you'll need access to the money. Your best automation lever is to move money before you ever see it. If your employer allows it, split direct deposit so part goes straight to savings. If not, schedule automatic transfers inside your bank and pick the right rail, meaning how the money moves. Internal transfer, ACH, or sometimes a debit card pull. Time transfers for the day after payday so deposits clear first. Start small, like $25 or $50 per paycheck, then raise it. And protect yourself from automation-caused overdrafts by keeping a cushion and checking. To keep an automatic plan from breaking, you have to match it to your cash flow rhythm. Align transfers with paydays, then build a checking buffer that covers the timing gaps between bills and income. Overdraft fee stacks are real. One negative day can trigger multiple charges, so design the system to avoid near zero checking balances. If money is tight, use smaller split transfers instead of one big hit. As you stabilize, switch to saving a percent of pay. Finally, set a tight month rule so you pause or reduce without quitting. Most failed savings plans fail for predictable banking reasons, not lack of discipline. Stop overdrafts first by keeping a buffer. Treat it like equipment, not extra cash. Mentally label savings as not spending money, or you'll keep transferring it back. Watch for transfer limit surprises. Some banks limit certain withdrawals or charge fees. Don't use wires for routine saving because they're built for speed and can cost $15 to $30. Check deposit holds can also delay funds, then raise your amount with a quarterly review. One $35 overdraft fee can wipe out a $25 a week savings habit. BankingHub matches you to accounts based on how you actually bank and shows the real dollar impact for your balance. Free, takes about 2 minutes, and the link is in the description.